traders, Gary Wagner with WFGForex.com, your daily market update for Forex Gold. It is the 15th day of July, Thursday, and this is the Daily Report. Forex Gold is currently trading about $1 lower today, pretty much unchanged on the day at 1208.08. What we are noticing this morning is that, like yesterday, we have gotten another doji-like candle. As you can see in here, we ended up with a doji candle here. A doji, of course, again, is a candle in which the open and close are very, very similar or exactly the same, and they signify a shift in power or a change and a consolidation of the strongest individual candle types. Now, traders, absolutely not always, but many times the doji is a significant candle that is found at typically tops and bottoms. More recently in gold, though, we have noticed that consolidation will tend to come right before a strong breakout, either to the upside or downside. As you can see, I've highlighted many areas, and not all of these areas are significant, but as you can see, if we look at the bottom of this Impulse B, right before we had this big sell in Impulse A, you get this cluster right here, and also a shooting star right in here, right before this C, this corrective wave really sold off. Of course, you have this very large doji right here at the absolute bottom of the market. As the market then moves back up, you get these double dojis here that formed the bottom. You get these double dojis here, another set of double dojis. Also, you get what is known as the opposite of a shooting star, actually, which is an inverted hammer here. You notice again, just like we saw at the bottom and the beginning of that one wave, you also saw it right in here, which was the second leg of this third wave, all throughout here. And you also notice at the tops and bottoms and at significant areas. Most recently, we noticed that we had this really what I'll call a doji cluster appear right in here, in which we had 1, 2, 3 small-bodied candles coming right before that major drop. Of course, this signifies what we are now calling our corrective phase. So we have our corrective wave A here, and right now we are looking at this pattern reemerging, in that we are seeing this consolidation once again. The other thing that I'm really noticing is that we are forming, if I draw our support line off of these lows here and look at a very short-term resistance just in terms of these highs here and here, a wedge or a pennant formation. And of course, a wedge or a pennant formation is a formation in which, as the ranges tighten, the energy compresses, and we therefore look for a breakout. Can be to the upside or downside, but a release of that energy. The other thing that I'm really noticing here is when we compare this last corrective phase, which took place off of these highs. Of course, this would be the top or the end of the impulse phase, taking us to our record tops in 2009 at 1221. We had this really deep, significant A wave, strong impulse in the corrective phase B, and extremely deep number C wave. When you look at this from 1040 down here and look at the high here at 1221, you can see that the market had gone down about $180, a huge and very significant move. You also notice that in this A wave, the market came down rather strong for a long period of time. The consolidation really didn't take place. It formed a base and then kind of went back up and then went back down solidly, and then you've got this extremely beautiful long-legged doji right in here. Well, traders, we're not seeing it with this corrective phase here. We're seeing a much less drastic corrective phase, and I believe that's because the fundamentals in the market, the extremely bullish long-term fundamentals in the market that I've been talking about, have kind of been dampening or holding back this correction, because the market, although it is in a corrective phase, at the same time, with the significant fundamental news that's out there, is really not letting the market sell too strongly to the downside. Now, in terms of fundamental information out there, we have had, according to Kitco, kind of a push-pull situation in that a solidly lower US dollar, bullish, was offset by lower crude oil prices, which of course are bearish, as prices held close to unchanged for most of the trading session. I spoke about this yesterday, and Wyckoff is pointing it out today. And he says gold prices have recently resumed an inverse trading relationship with the US dollar and a positive correlation with the euro currency. The euro currency rallied and hit a fresh 2-month high on Thursday on news that Spain's government bond auction went very well to subscribed investors. It does go on to say that what we're witnessing does suggest that the European Union's debt problems have at least stabilized. In recent weeks, gold has been supported on safe haven buying due to the EU debt crisis and a weakening European currency. Still, gold would likely see fresh haven buying interest on any new negative development in the European Union debt front, even if the euro was pressured on that news. So we have an interesting relationship where at certain times gold will have that inverse relationship with the dollar, and now having that positive correlation with the euro. I find that significant in that it seems to be tracking in a way that the investors want to perceive it, as opposed to a solid, steadfast correlation that we've always had. We've seen the inverse relationship between the dollar and gold break away, only to apparently come back again. My sentiment right now is that this market, of course, has been moving up higher, but I think that we're in for another leg down in the price of gold in terms of this bearish correction. I am looking, as I said, for a rally to maybe the 1221 area, although at this point, with these series of dojis and these triple tops, meaning these 3 attempts at highs at around 1218, which it could not take out or nearly close at, we might be looking at, and I underline the word might, but we might be looking at a scenario where this is the top that it has, and what we witness is our A wave having a subwave in it, meaning kind of looking like this. We have had not enough of a movement up for me to label this a B wave yet. It needs to go in terms of a Fibonacci retracement at least to 1221. So we'll have to see what happens. I can tell you this, traders, we've had an extremely quiet market this week as it attempts kind of to figure out where it wants to go longer term. Long term, I'm absolutely still bullish. Short term, I absolutely believe that we are in a corrective phase. This has been Gary Wagner with WFGForex.com, wishing you, as always, good trading. We'll talk to you tomorrow for the weekend review. Bye-bye.
When I look out now